Negative 24 and plus 8.3. What are those numbers? You're probably wondering. Well, I'm going to get into it in today's video because we're going to talk about the 2023 overview of the Garden State MLS data. We're going to see what happened last year and how that's going to impact 2024. Now, I know it's February already, but the data takes a little while to get out from them, so I'm a little bit behind, so apologies for that. We're going to get into it. And if this is your first visit to the channel, welcome to the New Jersey suburbs of New York City. I'm Jeff Massey. If you're looking to learn all about the New Jersey suburbs, then please consider joining our Subs of NYC community. We'd love to have you. And as always, if you're looking to move in the next 7 days or 7 months, give us a call, shoot us a text, or send us an email so we can help you make an easy, stress-free purchase in the area. Now, as I was saying, these two numbers here, we're going to talk about these in the GS MLS report, the Garden State MLS report, and it covers basically all of Essex County, Union County, Somerset, Morris County. That's kind of the bulk of the areas. There are other counties that are covered, but that is where the bulk of the data is coming from. So we're going to look at that. And as I said, these two numbers, we'll talk about what they mean. Something's greatly down and something's going up, and you could probably guess what that is. So let's jump into it and look at the data. Okay, so I have the report open here, and we're going to go through each category of information, and I think this is going to be really useful to give you a look at not only what happened in 2023, but you're going to understand more about what is probably going to be trending into 2024 and the long haul. And we can layer on some information at the end when we take into account the interest rates that are projected to come down longer term. So this is the this is the Garden State MLS. This is actually the December report, but it's basically summarizing the whole year in a sense. So 3 big takeaways. We're looking at 1 year change in closed sales down 13, almost 14%. One year change in home sales, all property types. This is down 30%. Sorry, homes for sale, meaning when you take into account all new inventory. And then this is the kicker. You're down a lot, interest rates are up, but home prices overall, when you look at median sales price average, up 13.2%, again, across all property types. That's the December snapshot. We'll see what it looks like on an overall yearly basis in a little bit. So let's go to the next page. Single family, we have December, and then we have year to date, which essentially is the year of 2023 in this case. The first group in red we have single family, in blue we have townhouses, and in green we have adult communities. You can see the bulk of the inventory for the Garden State MLS is the single family homes. So what can we look at year to date? Let's just focus on year to date because December is kind of a blip. Overall, we're down 23, almost 24% in inventory of single family homes, and that's from 2022. And you can see going back to 2021, 37,000 homes down to 24,000 homes last year. And these are new listings that have come on the market. These are not sold listings. And you can see here the seasonality when you go through a particular year. So this goes back to 2010. You can see our peak by volume was in the summer of 2015. And then again, 2018, 2019 had really stellar years in terms of active inventory, new listings coming on. And you can see that seasonality where it goes up in the summer and spring, comes down in the winter. And you can see here, 2021, it just kept dropping down here. And then last year, the summer was super low compared to other years. And then when we look at the winter, we're like in the basically lower than ever before. And you can see the other property types here in blue and green. So essentially, I'm rambling on about this, but new inventory down dramatically. So let's go to the next page. Let's clear this out and go to the next page. So pending sales, these are homes that are going into contract. Again, so now we're seeing the difference between homes that came on, homes that are actually going into contract, down 19% for single families, again, 19% for townhouses, condos, and about 12% for adult communities. Here you can see, again, the spike in monthly coming from 2020. So you can see the high there all the way down almost half in 2023. Let's go on because that one's not as exciting. Let's go to closed sales, down 24%, 24.5% for single family. Again, very similar for condos. So 24 here, 24 here, and then 15.9% in adult community. Again, looking at that peak in around 2020 summer, and then look at the peak from last year, just super deflated. Now, this is all due to, I think, two things. I've talked about this before. Systemic lack of new homes coming on. That, I think, is going to be a big thing going forward that's going to keep on. We're just not building enough homes. Now, you might say, Jeff, you tour new construction all the time in your videos. Actually, most of those homes are, I would say, almost 90% of them, if not more, have been properties where they took down the old home and they built a new home. Other new construction is like the Toll Brothers projects where you're seeing 30, 40, 50 to 100 units. Those are really the only new builds coming on, aside from more denser locations where you're seeing bigger sort of condo rental style apartments coming up. So those are the two big drivers in new construction, but it's just not enough to keep up with population growth and demand. So what this means here, what you'll see is the closed sales coming down. So like, again, that's just due to lack of inventory, but that other lack of inventory is people, I think, and it's really in this section here where people's interest rates started to go up. So that means they would probably want to be trading up into a new home, but they're having to hold on to those homes for longer because they're sitting in a like 2, 3, 4% interest rate, and they don't want to go into a bigger home with a bigger interest rate. So they're kind of happy with their monthly payments. So those are the things that we're really looking at in the past 2 years that I think are going to continue into 2024. Let's look at the next slide. We talk about median sales price. So this is where the supply and the demand start to interact. So we have low supply. Interest rates, yes, they did go up, but there's still people looking to purchase homes. And that's what, because of that low inventory that we're seeing here in the previous slide, let me go back, low inventory, or I should say low inventory here, low pending sales, low closed sales. Now we're getting into what are these homes trading for? Well, there's fewer homes to go around. Yes, interest rates are a little bit higher, but people are still wanting to buy homes. They need to buy a home. They want to settle into a certain town, certain location. They want to live their life. They realize they can refinance later, and that's something I talk about a lot for potential buyers out there that are listening. You can get in now, buy what you can afford, get in now, refinance later if rates come down. You're not going to have to deal with, again, I'm going to go towards my predictions at the end, but you're not going to have to deal with the pent-up demand in the future. So let's look at this. So in single-family homes, and look at going back to 2021, we've seen 13% increases, 7% increases. Yes, this is trending down a little bit. It's just under 7% for 2023, but it's still increase upon increase, right? So that average, this is median in this case, 560,000, 2 years ago it was 490,000. So even though you're seeing a slight decrease in the rate of appreciation in terms of median sale price, it's still appreciating, folks. So that's the part I want to get across to you. Yes, inventory is down, supply is down, but demand is still there. You can see that. And you'll see that a little bit later when we talk about sale price to list price ratio. So now we're going to go on to average price. And again, very similar numbers. Average and median, obviously, you probably remember from your math class, not to be patronizing or anything, but essentially median is the most common price point that's coming up. Average is where we're taking all the data into account, the highs and the lows, and this is where the mean property value is coming through. So in this case, it's just under 690. And again, we're seeing in 2023, just under 8% increase on average sale price. And that was trending off of 2021 with 14, 2022 with 8.5% here. So you can see that very similar things. Actually, condos increased tremendously. It's actually kind of a reverse where in 2021, condos were down. Well, not down, but appreciation was a little bit lower. And then in 2023, we see a big increase to 12.5%. Across the board, similar statistics in the adult community. So again, looking at that upwards trajectory in the last 3-4 years, that increase is really due to that low supply, and it's that kind of contrast that we're seeing when we start to look at supply and demand imbalance. So let's go to one more here. This is what I was talking about, sale price to list price ratio. So you can see back in 2021, still going above asking on average by about 2.6%, but trending forward. Now, this is where, even though appreciation of those values in the previous slides came down a little bit, we're still seeing above asking indications here. And what that is to say is, I think people, it's kind of two things, right? People know they need to bid aggressively, but also agents that are listing, they're listing very strategically where they know it's going to sell, so that they can get above asking and really drive interest and get people in the door. They're listing it a little bit lower. I'm constantly talking to this about buyers, where I'm explaining to them, look, even though the bank said this is your budget, we need to look a little bit below there strategically, because we know that depending on the town, and this is an average across the entire Garden State MLS, we'll talk about in another video where those big swings are in terms of specific towns. But on average, 4.5%, almost 4.2% above listing price. And you can see that this is a newer trend in the last few years. Again, I think it's really coming from where those listing agents are becoming more strategic, but also due to COVID in this, in these few years here, we have really that demand where people need to get in, so they know they're going over asking. It's not even a question. So let's go to the next slide here, days on market. This is an interesting one. I think marginally it's even though these numbers are changing, like it went up 6% in 2023. You can see it was actually down 30% in 2021. But I think realistically, what's the difference between 37 and 36 days, 34 days? It's not that much. These are just averages. And I think in the really, really sought after towns, these numbers are even lower. Due to the fact that there's just not as many homes available. I keep saying that, so it sounds like a broken record. But you can see over here the trend downwards. We're seeing strategic pricing, above asking offers, and things going very quickly. So that's really what you need to be prepared for in 2024. This is not going away. As you can see, the line is definitely a trending line for sure. So let's go to the next one. And this is the Housing Affordability Index. And this could be really interesting for you depending on where you are in your situation of affordability. You can see here. Now, I want to be clear here. The lower the number, the less affordable. And you can read that here. You can pause it and read this description. But the lower the number, the less affordable in this case. So for single family in 2023, you can see it went down. So it became less affordable in 2023 by about 8.5%, and even more in condos. We saw 11.8, almost 12%, and you can just see that steep curve here. Affordability, this is coming down to prices appreciating, obviously taking into account interest rates going up, so your monthly payment is going to be higher. So this is where affordability is becoming a real issue in the Garden State MLS across the board when we're looking at averages. All right, so let's go on to the next slide here. Inventory of homes. Yeah, so going back to what I was saying about supply, you can see that trend downwards overall. You can see those monthly spikes in the summer here. But again, those spikes have been a lot lower in the past 2 years compared to other years. And I think the more interesting slide, we're going to go to the next one here, is months of inventory. So when we take that previous slide of just supply and we divide it by how many deals are going pending in 1 month, we can see how many of the available homes are there per month for buyers. So way back when, 10 years ago or so, we saw this is a real seller's market back here. It was like, in the case of adult communities, it was over 15 months of supply. In the case of single family, it was right at 15. But today we're looking at right about 1.6 months of inventory. This kind of correlates a little bit with days on market. So again, look at that trend going down. And this is, again, due to lack of supply, but also those tighter interest rates. But you can see, going back to what I was saying about lack of supply, like the tighter interest rates happened here, and it didn't change that much. The lack of supply is happening here. From the last 10 to 15 years, it's gone down, right? So that is a real key factor that is going to let you know, again, we'll make our predictions at the end, but the interest rates, they're not going to bring that many more homes. If interest rates go down again and people are feeling like, okay, I'm going to get back into the market, I'm going to upgrade my home, or maybe I'm going to downsize, but then I can afford something. Anyways, that's going to bring more homes to the market, right? Because of those interest rates coming down. Well, again, look at this historical trend downwards of inventory. It's really unprecedented in our society, because typically, if you look at past decades, we've been building and building and building. Now we're like, we don't have anywhere to live. Population is growing. So let's keep going. I know I'm rambling. This slide basically summarizes everything we just looked at, and it looks at the entire, I think it looks at all property types. So we can see here again, when we're looking at the information, 23% decrease in, so for year to date, in new listings, 19% pending sales, negative 24% closed, increases by 8% in median sale price, again, increases by 8% in average. And again, you can see those bigger numbers here. You've got to be 4% over asking on average for the GSMLS. And again, stay tuned, because I'm going to play another video soon. I'm going to record that very shortly, where we talk about the top 30 or so towns in the GSMLS and how much over asking those particular towns are going. So this is just an average of all the towns. Keep that in mind, 4% here. And that is up a little bit overall year to date. Days on market, again, like I was saying, 34 days, not much change marginally. And that affordability index overall going down close to 10%. All right, so I hope that helped you get an idea, get a sense of what's going on from 2023. And this is going to help us predict a little bit of the trend from that year into what's happening this year in 2024. And if you remember, I was kind of hinting at it a few times. The Fed mentioned the other day that he wasn't going to change the rates in the upcoming, I think it was March. He kind of forecasted that he wouldn't be changing rates. So this is creating speculation from people that basically the interest rate reduction is going to be something that's coming later on down the road. We're not going to see that anytime soon. It's probably going to be another 6 months to 12 months before we start to see significant reductions. And what I think, again, going back to this kind of systemic lack of inventory, this is going to continue. And if interest rates do come up, or I should say come down a little bit, it's going to pull out that pent-up demand. But I don't think inventory is going to increase that much. That's just my opinion, based on the fact that there's so many people that do have mortgages that are still in that like 2, 3, 4%. So if they come down to like 5.5, 6, whatever is going to make people start to feel a little bit more comfortable, we're still not going to see the seller side feel more comfortable in terms of getting out and putting their listings on and kind of moving up that property ladder or down that property ladder, depending on if they're upsizing or downsizing. Anyways, my point there is we're going to still see a lot of demand in terms of that people coming into the market, but not a ton of supply that's going to keep pricing very consistent with what we're seeing today. You're going to see over asking bids, and you're going to see higher prices. So as I keep saying with everyone, if you're considering buying right now and you've got the budget in terms of down payment and monthly payment, buy what you can afford right now. You can always refinance that interest rate down the road, whether that, like I said, that's going to be 12 months or 18 months. Get in now so you're not struggling and competing with everyone else that's sitting on the sidelines waiting for the rates to come down. When they do come down, they're going to jump out. It's going to be crazy. I mean, I keep saying the word crazy, but really the shifting market lies in the pent-up demand. I think that's what we're going to see in the coming months. So as always, thanks for watching. I'm going to point you to another video that I'm going to make right after this one. It's going to be the top 30 towns that traded in the GS MLS. We're going to look at how much those towns went over asking, what the average sales price was, what the median sales price was. That's going to give you an idea of where these really competitive towns are, especially in the Midtown direct areas that have those super fast commutes into New York City. I'll see you over there in a few seconds.